finances. And today we're going to be discussing how does having a bankruptcy impact getting mortgage approval. Often people think that a bankruptcy is a death sentence financially. In most cases, especially if you know what you're doing and you know how to rebuild your credit and start over again and you're patient, you actually can end up in a much better place. Obviously, people file bankruptcy for various sundry of reasons. Typically, bankruptcies are filed mostly through medical collections, medical debt. Sometimes bankruptcies come from divorce situations, just life just happening to us. And in some cases, a lot of cases, they happen because people have poor financial habits, poor financial management, and it leads to racking up a lot of debt, which will cause an individual to have to file bankruptcy. So it's not a death sentence, though. It's a life reset. And a lot of times people are unfairly judged because they file bankruptcies. Sometimes people are judged with no understanding of why it occurred. So when you have a bankruptcy notation on your credit report, a lot of people focus so much on it being on the credit report versus looking at the positive side of they have no debt. And then understanding that now they can take this fresh start and rebuild their credit. I mean, essentially, if you know what you're doing and you're patient and you take things the way they should be taken, and you retrain your brain, retrain your mental capacity, rechange your habits and how you approach the situation, you actually can end up in such a better place. I mean, you essentially can have, in 9 to 12 months, you could have a 707 to 715 credit score. 9 to 12 months after discharge, you actually can. It's very possible. I've seen it, and I've helped a lot of clients achieve this. It's not hard at all. You just have to know what you're doing. Be that as it may, you still will have that bankruptcy notation. Thus, that means that there will be some lenders, as it relates to credit cards, that will not give you any credit cards for a certain period of time, but you will be okay with what I call bankruptcy-friendly banks and bankruptcy-friendly credit unions. Now, I'll go into this in another video, but as it relates to mortgages, you only have to wait a certain period of time. As you can see here, I have the bankruptcy seasoning. So the bankruptcy seasoning applies to FHA and VA, and I left off USDA, but they apply as well. Many people don't apply for the USDA because most of the areas that most people will want to live, they won't qualify for USDA. But the guidelines are very similar to FHA and VA. So when you get discharged from bankruptcy, you have a 2-year seasoning period on FHA and VA. Essentially what that means is the date that you're discharged from the court, you did your meeting with the creditors, people had their chance to do their objections to the bankruptcy, everything goes through, the judge looks at everything, and he makes a decision, he renders it, boom, discharged. You will get a letter in the mail, letting you know your debts have been discharged, and from that date forward is when the 2-year clock begins. It's a seasoning period, and if you want to buy a house again, 2 years is a great preparation period, because all you have to do is start rebuilding your credit, and in 2 years of a bankruptcy, you should be well over 720, probably 740 again if you do the right things. So your credit scores will be fine. The question will be, have you retrained your mind to make better financial decisions? That's the most important thing, because if you do not retrain your mind to make better decisions, you'll just end up back in bankruptcy again. The chapter 13 is a little different, because let's say you're on a current chapter 13 As long as you're paying your payments on time over the last 12 months and you get permission from the court trustee, you'll be open and available to be able to apply for a mortgage. Now, of course, there'll always be some lenders who won't do this deal, but there are plenty who will. And if you've already been discharged from a Chapter 13, it's 2 years from the discharge date, like Chapter 7. So as you can see, a bankruptcy is not a death sentence from buying a home. It's just a seasoning period, and it's also a season of preparation. And that's one of the main reasons why you see these seasoning periods, because it's giving you an opportunity to get your life back together, rebuild your credit, get your finances back together, whatever you need to do to get yourself back on track. Obviously, if you had your information removed because of inaccurate information through the Fair Credit Reporting Act or Metro 2 data compliance, you still would need to declare that you filed bankruptcy. You'll see languages on mortgage applications. So many, houses I've bought over the years as an investor. So, the wording varies from last 7 years, last 10 years, and some applications to say, have you ever, which means lifetime, ever filed a bankruptcy? But I would say that most of them just ask about the last 7 years. But it just depends. So just declare you have a bankruptcy, even if it's been deleted. Do not lie about that, because it's easy to search public records and know that something like that occurred. Okay. Now, moving on, the conventional mortgage is a 7-year seasoning period. A 4-year seasoning period. As you can see, conventional mortgages always have a little more additional underwriting requirements or overlays than FHA and VA. Chapter 13 is 2 years or 4 years from the dismissal date. Now, dismissal date, that's interesting, right? Some people will file Chapter 13, they didn't complete it, they start making payments, or they just decided they didn't want to go through with it anymore, or they came up with the money to pay everything off, and it will be dismissed by the court for procedural reasons or whatever happened. Now, 4 years from that date, you're eligible to do a conventional. But if you pay it out, that's 2 years. But technically, it's really 7 years, because most Chapter 13 plans are set up on 5 years. So if you do it through 5 years and then plus 2, that's 7. But if you're able to pay it off, meaning pay your Chapter 13 case off early. So whatever that discharge date begins is when you'll begin that 2-year clock. But if you end up getting dismissed for procedural, you're not paying on time, or the creditor sued, they won the case and got it dismissed, or whatever that may be, you're 4 years from the dismissal date. So bankruptcy is not a death sentence. You still can own a home. Inaccurate information on your credit report based on the FCRA can be removed if it is not reporting accurately based on the Fair Credit Reporting Act and their own Metro 2 data compliance. So don't ever feel like the bankruptcy is a death knell. If you have any additional questions about bankruptcy removal, please feel free to contact me at the link at the bottom. You'll be able to talk to maybe you'll talk to me, maybe you'll talk to someone from my sales team, and we'll be happy to have a free consultation with you, discuss our credit repair program with you and our educational programs to be able to assist you in your financial future. Thank you for watching, and make sure you click the like button and you subscribe. We look forward to hearing from you in the future. Thank you.